Hello, welcome back to Udomo. And Trendy is getting a new name. It's going to be called Udomo. And today I want to do some stock analysis on buy now pay later companies. These companies have been growing in market share in the past couple of years, and essentially they're offering 4 interest-free installment payments against a purchase. So some people might use it because instead of putting the purchase on a credit card and carrying a balance and paying 17, 20, 25% interest on your credit card, you could perform a buy now pay later on a purchase and make 4 interest-free payments against that purchase. So typically the zero interest is for 2 months worth of payment installments. So typically the saying is, pay in four. So every 2 weeks you make your payment until it's 4 payments and you pay it in full. Of course, with anything there's a catch, right? So the 4 payments, if you miss one, you're going to be hit with 30% interest, right? So some people might want to justify it and say, well, as long as I don't carry a balance, or as long as I don't miss it, as long as I don't miss a payment, 0% interest and I'm fine. Simultaneously, personally, in my own financial journey, personally, would I perform a buy now, pay later? No. I would rather use a credit card, get points, get cash back, and then pay it in full every single month. If you for you know for if you don't have the money to purchase an item, you should probably not buy it in the first place. Easy to say for you know some people, easy to say. Some people, perhaps there are scenarios where you do need a buy now pay later. I don't know your story, but um, anywho, that's the general gist of what a buy now pay later is. 4 interest-free installments. If you miss one, you get hit with a high interest. That's how they make money. Typically, there's a soft credit pool, but no hard credit pool. So that attracts some people. Instead of getting a ding on your credit score when you do an inquiry, you could just do a soft pool through a buy now, pay later. Today is Sunday. I have a coffee and we're going to start looking at some stocks. So with the Udomo API, I was able to get the Affirm income statement already downloaded. I'm going to do the same thing for a couple more companies. So I'm going to go to get data from the web. I'm going to pull Udomo, and we could go to the API tab, and I'm going to go to documentation. So this documentation tells me I could input this request to get some data. So I'm going to copy and paste that into here. I want quarterly data since I want some more granular historic data. And when you pay for Pro, the Pro tier, you can get quarterly historic data for over 3,500 stocks listed in the US. I'm going to turn this into 2027 just so that I don't need to update the date for a while. I'll type in probably 2018 is good. These buy now pay later companies are pretty recent and new, so I don't think we have to go back too far in history. I'm going to also get my API secret and keys. And don't worry, by the time I paste this in, I'm going to regenerate my keys, so I don't have to worry too much about it. And now I need my API key, so I'm going to input that too. I'm going to hit go, and it's going to retrieve it from udomo. We're going to convert it to a table, keep the default settings, and now we have all these columns. I'm going to turn this into the proper data type. Along with these is two. I want date time, and I want a date. Ah, shoot. Okay, so I messed that up. I'm going to get rid of that. This is a date time. This is a date time. And this is a date. Perfect. Okay. And I forgot to change the ticker. So let's do that. Instead of Apple, another popular buy now later company is Sizzle. So let's try that one. What is Sizzle's ticker? It is SEZL. So let's do that. SEZL. There you go. So now I got ticker Sizzle. And I'm going to say SEZL income. So I'm going to close that. We're going to run that query. And now we have Sizzle. And is there any share units on that? No. Okay. Perfect. So now we have a firm income statement, historic data. We have Sizzle income statement data. I'm going to do this again. Goal here is to create a basket of stocks. Here are all the buy now, pay later companies with public trading. And then see if there's any buy now, pay later companies that are trading at a discount compared to peers. So what's next? I'm going to actually copy a query from this. That way I don't have to re-input everything. So let's do that again. Let's do XYZ because that company is Block and Block owns Afterpay. And they are also a buy now, pay later. Obviously, XYZ, not the most apple to apple comparison when it comes to Firm or Klarna, since Block does have other forms of business. But for the sake of the basket, I'm going to include it. So I'm going to close that, load XYZ. Notice how there's units. So I'm going to perform a if statement. So if F2 is equal to thousands, then I'm going to take H Yeah, then I want H2 times 1,000 if F2 is equal to millions, then H2 multiply that by 1 million, and I think that works for now. So now we have line item values in thousands. We didn't have to do it for Sizzle because all the line items are already in their respective values. So we're good there. PayPal also has pay in 4. So why not? Let's do that too. So PayPal PYPL, let's load the income statement for that too. Do the same thing, turn this JSON data into a table. And we're going to clean up the data types here. Okay, perfect. I'm also going to want to check something else. I'm curious if we have any Klarna data at Udomo. So I want to keep that as that. And I need to look up what Klarna's KLAR. KLAR. Okay, so in Udomo, we don't have Klarna data yet. So for the sake of the basket, I'll probably try and find Klarna data elsewhere. In the meantime, but I do want to get Klarna data. Klarna has also only existed for a while. The max data is, at least from the chart, it looks like they IPO'd in September of this year. So the data on this company is probably going to be a little thin. But they're down 20%, so maybe there's an opportunity there. Who knows? Either way, we don't have the data for that yet in Udomo, so we might have to ignore them for now. Okay, so we have all this data, right? But in the form that it's in right now, it doesn't look really helpful, right? We want to be able to make investing decisions based on this data, right? So how do we make it helpful? We could create some pivot tables. So why don't we take the value scaled? I'm also going to take the line item. So what am I currently interested in? I think calculating price to revenue would be beneficial, and seeing their net income. I think that would also be helpful. So let's just look from Udomo Atlas, right? So the Udomo Atlas allows you to visualize these financial statements. So instead of having to manually go to every single individual filing to gather information, you could just hop onto Udomo. And for example, we could see a firm's total revenue net growing dang near every single quarter ever since December 2019. So clearly there's demand, growing demand for this product, and the interest income's growing with it as well. So let's filter out and leave total net revenue net on there. Let's also look at operating income. Are they making money or are they losing money? So we have net loss and net income loss. So I'm going to add both of them. So 2020 to mid end of year 2024, a firm was losing money every quarter. They had a negative net loss. September 2024 quarter, they had a net loss of 100 million. Then it became positive. December 2024, they had a net income of 80 million, net income of 2 million in March 2025, and another 80 million net income September 2025. Okay. So that's a good trend to see. You have a net loss company turning into a net profit company as the total revenue net increases. So that's good to see. So yeah, we have a bunch of line item data that we can visualize, but for now, this is a pretty good chart. So I want to be able to get this data into my Excel, right? This kind of format. So let's do that. We have all this data, but we're not interested in all of it. We want total revenue net. We want total revenue net. We also want net loss and net income loss. So that's going to give us our revenue and our net income. We also want to break this down out into quarters. So I'm going to get the column date, and that is in order. So I like that for 2020 to 2025. That looks good. So we're basically going to want to do this again for the other companies. So I actually want to insert, and I'm going to affirm so I know what company I'm looking at. What else? Oops, I don't want to do that. Now let's do XYZ, and we can go to XYZ. We could insert another pivot table. We could input it in the existing spreadsheet. And then we're going to do the same thing, right? We're going to use the value scaled value, and that is a count. Why is that a count? This is a number, as it should be. And that is, for some reason, a count. Oh, here you go. Sum. Okay. That works. Line item. Let's put that in the rows. Let's put dates there too. And I just want the raw date. So I'm going to remove the year, quarter, month, and I just want the date. Okay. Notice that the dates look different in a firm. Is the date in a firm not an actual date type? Short date. Can I do that one? Let me make sure I'm downloading this data properly. Okay, here you go. So it's still a text type in mQuery. So I'm going to change that to a date, change that to a date time, change this into a date time. Now I'm going to close it and load it, and then it should load properly this time. And then I got to refresh the pivot. There you go. Yeah. Um, so now you have 2025, but I want to order this from smallest to largest, so oldest to newest. And then same thing here, right? So let's go here. Let's look up XYZ. I mean, it's a pretty good looking chart, right? Like we have revenue growing. 2021, good year. But every quarter, this company's raking in around 6 billion in revenue, and their gross profit has been increasing quarter after quarter. And their total cost of revenue in the most recent months, it looks, or quarters, it looks like revenue has been increasing while the total cost of revenue has been decreasing. So that's also a good trend. So let's see if Block is actually making money or not. Operating income. Let's see if there's any interesting. There's also net income loss. Okay. So we have revenue, total cost of revenue, gross profit, operating income loss, and positive operating income. They were negative operating in 2023, but they recently broke out of that. 2024, they became a operating income positive company. So that looks pretty good. I'm also curious about net income loss and net income. Yeah, so let's check those out. And I'll go back a page. I'll remove operating. There you go. Same kind of story. They were negative income generating in 2023, but in 2025, they're now a positive net income company every quarter. Okay. So again, decent chart. I don't like companies that lose money, obviously, in 2023 and 2024, but 2025 seems like a good year for Block. Okay. So we're going to want to do the same thing. So I'm going to want revenue. I'm going to also want income loss and net income. Okay. And 2019 to 2025. So that data looks good. Okay. So we could also do the same thing for PayPal. We're going to do the exact same thing. We're going to pivot the data. Again, we could check out PayPal in the Udomo Atlas. And I see a comment. Secret Gamer. How you doing, man? Thanks for the question. Um, his question is, what about the overall sector of buy now, pay later as a whole? I think there's some specific risk associated with buy now, pay later. Majority of those companies are issuing unsecured loans because these are for, say, smaller items, say less than 1,000, less than 500, less than $1,000. And people are, I think one of the companies that'll benefit, for example, is Amazon, because Amazon can offer buy now, pay later solutions, but Amazon doesn't take any of the risk. The buy now, pay later companies are the ones that are financing the risk. Amazon gets the money up front. Buy now, pay later acts as the facilitator. Buy now, pay later companies take on the risk. And if you invest in one of these companies, you're going to be taking on the risk as well. You own part of the company. But buy now, pay later as a whole, let me actually use Google this time. Um, that's a good question from Secret Gamer. Let's check out the buy now, pay later market. Um, let's look at market trends, page 8. This is from Consumer Financial Protection Bureau. Total monthly US app usage for 5 buy now, pay later companies. You see this growing trend. Monthly app users from 2021 January to October 2024, This industry is growing. Whether it's a good thing or a bad thing, that's a whole nother conversation. Frankly, personally, for me, I don't see myself using buy now, pay later, but I have my own financial journey. You have your own financial journey. But in terms of industry performance, we're seeing this industry grow from 2 million monthly app users to now 6 million. And that was October 2024. I bet you that number is higher. You have money leaving traditional bank accounts towards buy now, pay later solutions. And this is October 2024. That 6 million, I bet that is higher. Roughly, this is Google AI, so grain of salt. 91.5 million US consumers expected to use buy now, pay later services, driven heavily by Gen Z millennials seeking flexible payment for e commerce. So, again, if this trend continues, Amazon is going to benefit from BNPL. You go to Amazon.com and make a purchase, you're like, uh-oh, I don't have $1,000 to buy this thing, but I really want to buy this thing. BNPL is going to open sales for Amazon because the people that originally were not able to purchase something because they don't have the immediate money now are going to go on buy now, pay later to purchase that item, increasing sales on Amazon.com, increasing sales on Walmart.com, right? Even the DoorDash thing, they're gonna enable BNPL on DoorDash app, so when we think about the sector as a whole, the people that are selling the items that people want, they're going to benefit as well. BNPL, though, you buy these, if you're going to buy these stocks, you're also now engaging in that unsecured product risk where there's no collateral attached to it. Let's look at yeah, plenty of app downloads. I'm curious. Let's look at buy now, pay later customer credit scores. Let's look at how healthy are these people that are taking advantage of buy now, pay later. That's not. Let's look up who uses buy now, pay later. Let's try that. So, for example, initially we read buy now, pay later is used by Gen Z and millennials. So, initially that would make me think, okay, they're just joining the workforce. They might not have a lot of money saved up. They might have thin credit lines, so they're seeking alternative ways to borrow while their credit is thin. This is kind of what the Federal Reserve Bank of Boston is saying. Buy now, pay later users have significantly less money in liquid assets compared to non users, as indicated by their respective checking account balances. On average, buy now, pay later users have $2,000 in their checking account, whereas other consumers have an average of $6,000. Simultaneously, we just read that majority of the people that use buy now, pay later are Gen Z, millennials, or yeah, Gen Z and millennials. So is their business checking accounts lower because they use buy now, pay later? Or are their business checking accounts lower because of their age? Right. So I don't think buy now, pay later causes smaller checking accounts. I think buy now, pay later is associated with smaller checking accounts because of the age group that buy now, pay later gravitates to. Buy now, pay later users are significantly more likely to revolve on their credit cards. So, buy now, pay later users revolve on their credit cards compared to those who don't. 71% of users revolved on their credit cards in 2023 compared to 40% of non users. Users are likely to accrue high interest costs on every dollar they charge on their credit cards. And this is the risk with buy now, pay later. You make a purchase using buy now, pay later. You make another purchase, and then another purchase over here, and then another one. And then all of a sudden, you have 10 outstanding, buy now, pay laters, and you go into delinquency. You forget to pay this one, and you forget to pay that one, and then you lose track of all the buy now, pay laters that you have in the ether through Affirm and Klarna. Imagine having 5 buy now pay laters in Klarna. Imagine having 5 buy now pay laters in Affirm, 2 in PayPal, 2 in Sizzle. You lose track of it. And then all of a sudden, oh, I forgot to pay one. You get dinged with 30% interest rate. You might get dinged on your credit score. I'm not sure how that works. So that's the risk of over leveraging buy now pay later. Buy now pay later carry non-users of buy now pay later carry higher unpaid balances on average amongst revolvers. Okay, here you go. Credit scores. This is what I wanted. Used buy now pay later in the last 30 days. Used buy now pay later more than once in the past 30 days. So comparing people who used it once compared to people who used it multiple times in the past 30 days. Greater than 800 scores, only 0.8% of the group compared to 2.8%. Consumers with low FICO credit scores are significantly more likely to use buy now, pay later than those with higher scores. 23% with credit scores below 600 and 21% with credit scores between 600 and 650 used buy now, pay later at least once. compared to with only 2.8% with credit scores higher than 800. 23% of consumers who declared bankruptcy at some point during the previous year used buy now pay later at some point. So the clientele sounds a bit more risky, right? You have 600 credit score people using buy now pay later. You have almost 1/4 of those individuals declaring bankruptcy in the past uh, are also users of buy now pay later, right? Credit score is a strong predictor of buy now pay later use. A summary statistic from the SDP CPC conducted regression analysis using survey data to estimate the marginal effects that selecting financial and demographic characteristics have on the likelihood that customers use buy now pay later. Even after the analysis control for income, education, and race, consumer credit score is the most important factor predicting buy now pay later usage. Consumers with FICO scores lower than 700 have a significantly greater probability of using buy now pay later compared to consumers with higher credit scores. Consumers with FICO scores greater than 750 have a significantly lower probability of using buy now pay later. So the clientele is of higher risk. And that is why Affirm and Klarna are able to charge 30% because they're taking on a larger risk. Okay. So that was some summary for the overall sector as a whole. We learned that buy now, pay later users are of higher credit risk, especially in the lower 600s, the 650s. Simultaneously, we're learning that the industry is growing, whether for good or bad. 6 million monthly users in 2024 and total users for 2025 reaching 91 million. So clearly large usage. The only question is who's going to be holding the bag, right? If we ever have a large recession like '08 or a bubble pop like '01, these are the type of loans to default first. Unsecured, low credit. These are going to be the loans that blow up first. So the question of buy now, pay later is going to be who's going to be holding the bag. However, in the meantime, in the past 5 years, the industry is growing. So let's continue with our analysis. But good question from Secret Gamer there. Thanks for watching. I hope you enjoy the live stream. We're going to now get PayPal's income statement. And we're seeing good numbers from PayPal. 2016, they used to be a $2 billion net revenue company. They are now a 8.4 billion revenue company. So good trend there. Um, why don't we remove expenses from the chart? I want to look at what's total operating expenses. So operating expenses has been increasing with net revenues, but hasn't surpassed it. So that's good. Operating income, They are a positive operating net income company. They are flat in operating income, um, but it's still good. I mean, it's still good growth. So we have 300 million in operating income in 2016. They are now a 1.5 billion. So I take the flat back. It's decent growth there. Let's look at the net income though, not just operating. So let's check this out. They used to be a 255 million net income company. They were negative in June 2022. They lost 300 million that year, but they're back to positive. Their net income is 1.2 billion. So positive net income company, and they've been growing revenue ever since. So again, good chart, something that I'd like to see. So let's add this to the basket. We can take the date, we'll put that in the volume, remove field. There's the date. I'll take the line item, and then we need to scale. We need to scale this. So PayPal's in millions, so we could do valued, scaled, and I'm going to copy from firm because I don't want to type it again. So we have millions, value, great. So here, basic in dollars and shares, share units of millions. So I'm going to multiply by a million, great. And it's actually all millions, so perfect. I don't have to worry about that. We're going to refresh this. Uh, where can I change data source? Oh, it does have it. Okay. Where is value scaled? Oh, there it is. Nice. Okay. So I could just drag it in there. Perfect. I want to make sure it's newest to oldest. Oh, no, just kidding. I want oldest to newest. And then I want revenue and net income. So I'm going to do net revenues, net income loss. So there you go. We're looking good. Okay, and then the other one that we have is sizzle. So I'm going to do the exact same thing. I'm going to make a pivot table. Sizzle income, existing spreadsheet. Let's go there. I'm going to do the dates as the columns. Let's remove that field. Let's remove that field. And then let's look up sizzle in the Udomo Atlas. Again, Udomo Atlas, it gives you all the line items in the SEC filing so you can visualize income statements, cash flows, balance sheets. If you pay for Pro, you get quarterly, not just annual. And free tier, you get 3-year look back. Pro tier, you get all the data that Udomo has on the company. So you get more than 3 years. So for example, interesting, Sizzle, the data has stopped at 2022. Interesting. So why is that the case? We're annual at 2022. We got more data on the balance sheet side. What about cash flow? We got more data on cash flow. Okay, perfect. This will help us with net income. But let's look at the income statement for the revenue. They're a positive net income company. Total income is on the top. Do they seem to not have revenue reported. That's interesting. Why would they not have revenue? They have total income. Okay. So instead of income, why don't we change the query, and instead of income, we'll just grab the cash flow, because cash flow has more data in it and it's got net income in it. So I want that. So let's do that. So now we have cash flow. I'm going to change the property name. Cash flow. Perfect. Close that out. Okay, perfect. And then this is all thousands. Yeah, it's all thousands. So, okay, so I'm going to take our formula from value scaled, use the same formula. Okay, perfect. And then I'm going to refresh our pivot table. Value scaled. And then I want individual line items. For this one, I want net income and net income loss, and that should take care of that. Perfect. Okay. I'm seeing I'm seeing some missing values here. Perhaps they ported under a different name. Let me try net income loss. No. Okay. We seem to not have data on that month. That's okay. So I'll just remove that. Okay. I will be right back. All right, I'm back. Let's let's keep going. So we have Affirm, Block, PayPal, and Sizzle data. I want to also add Klarna in there, but I don't know how much data is available on Klarna because Klarna just went IPO. Man, I don't know how to reorder it, so don't judge me. Don't judge me when I manually switch it. It's fine. Okay, here you go. So we're gonna say Klarna. What's the ticker for Klarna? KLAR. Great. Okay, so we're gonna want the revenue and the net income from this company. I also want net income. So they started off as a positive net income company. Oh yeah, why did I switch that? That there you go. That's what I want. It might help if I zoom in as well, so let me do that. All right. Now, what we need is to get the stock price data of these companies so that we can calculate financial ratios like price to sales. I'm going to create a table to store each respective stock's shares outstanding number. And we could use like an X lookup to grab the right one when we need to do the pricing. So the next question is, how do we get the stock price? Well, we have a Excel function. Excel has a function called stock history, and stock, we want daily. I do want headers. I'm going to repeat this. Perfect. So now we have stock prices going all the way to 2025. So that works. That's good. So who has the longest date? Looks like PayPal. So let's follow PayPal. Does it not like that? Because one is, oh no, that worked. What is that? Why is it negative? March 2021. March 2021. 70.72. 70.72. Why is it negative? Is it all negative like that? I don't like how it's negative, so I'm gonna have to change that. We now have dates for June. We do not. So we go to March, then September, then December. So we don't have June data, so that's going to stay not found. That's okay. Now that we have the revenue, net income, close price, and market cap, we can calculate the price to sales and the price to income for these companies. So we can do market cap divided by revenue. We can also do market cap divided by net income. I could drag both of those over. And then let's visualize this. So we could see the price to sales started off very expensive. I actually want to get rid of '06 because we don't have data for that. Looks like all the other companies we have '06 data. So it might be worth keeping. So instead of outright saying 0, we'll just remove it. That way the chart looks a bit more clean. There you go. So now we have the price to sales of firm. And this company started off very, very expensive. The price to sales was trading at a 45. value 45. What date is that? March 31st, 2022. March 31st, 2022. It was trading at 45. So let me fix that because I don't have the date in there. We should have date in there. It should be better. And the idea here is to repeat this analysis on the other stocks. So we could do XYZ. So XYZ, we have revenue on the bottom. And then we also want net income. March 31st, 2023. Do we not have that for March 31st? March 31st, 2023. It's 0. March 31st, 2023. A value exists. It should be 91, 95. Oh, duh, because I'm being silly, so it should be like that because it's going to return a blank and then we should go to the other. Yeah. So the zeros should change. Yep, there you go. 3/31, 2022. 3/31, 2022. Yeah, we don't have any income data from 3/31, 2022. Looks like it was zero. Trying to see if there was data available in the atlas. We're using what fields? Net income loss, net income loss. And we're looking for oh yeah, we are missing September and September 2023. So either the SEC on the file, they didn't have it under the same name as net income. What about net loss? We could substitute it with the operating. Because we want March data. Operating income was 67, so we could substitute it for that. But we can't change it in a pivot table. Right. Okay, so 67. And then in March 31st, 2021, the revenue was 5 billion. Negative 226 million. And again, the idea here is to create a basket of stocks for the industry that you're looking for, calculate their price to sales and their price to income, even price to free cash flow, and then calculate what's the industry average multiple for this sector, and then see which stocks are trading at a discount relative to the industry and see if there's an argument to be made. I hope you enjoyed this live stream and seeing behind the scenes of my investment philosophy. The goal of Udomo is to locate dislocated yet high quality companies that continue to generate revenue and take advantage of those instances in the market where you're seeing discounted prices for high quality growing companies. They're growing revenue, they're income positive, their expenses are going down, their margins are getting increased. They're a positive free cash flow growing company. Those are the features of a company I like to see in my personal financial journey. Of course, not financial advice, but I hope you enjoyed seeing the behind the scenes of my philosophy, how I research stocks, and how I leverage Udomo.com. Udomo offers API, dashboard visualization solutions, and you're now able to see my own track record. So Udomo had a great 2025. We're up 42% compared to the S&P, only up 16%. And this is why we enjoy high quality yet dislocated companies. And if you're a pro member, you can scroll down and see my portfolio allocation. So check that out in the pro tier as well. Thanks for watching the live stream, udomo.com, API dashboard solutions. Coming soon are stock screeners. So I'm super excited for the products that I'm making at Udomo. Check it out. Thanks for